Hi guys, welcome back. You're still tuned into Trading Hour and we have a guest joining us. Jigar Mistry is joining us now of Buoyant Capital. Jigar, good morning and thanks a lot for joining us. This is Pavitra. So, a theme that we've been talking about so much is India sort of decoupling from what's happening globally, right? Even within Asia, we've seen all of the markets seeing slips between 12 to 20%, and the Indian market has been quite resilient in that space. So how do you see it trending from here on?
Good morning, Pavitra. Thank you for inviting me on your show again. Yeah, exactly. So let's imagine if we were in August 2021 and, if we were to accurately predict that NASDAQ will be down 20% in a year, Dow will be down 10%, crude will be $35 higher, FIs would have sold $35 billion in the coming year. I don't think any one of us would have been able to predict that Nifty will be up 4%. Right. So what has been achieved is truly spectacular. Some part of this, I think, also owes allegiance to the fact that, the liquidity has been very, very strong. To some extent, the domestic investors have kept the faith. And very briefly, we entered a territory where 1 year returns were negative. But I think that got corrected after the June rally. More importantly, I think FIIs might be having a rethink because, after the Russia-Ukraine situation, they are probably reassessing that 50% of my erstwhile market, right, Russia, China, and Hong Kong, probably is no longer, good enough to attract as much flows as it used to. And therefore, India then becomes the de facto sort of destination. Also, Brazil has also moved up equally well. But Brazil then is a very resource-dominated sort of economy and GDP. So to that an extent, I would say, it's the flows that are driving it. But, I think we should actually take more steps further and look at whether this liquidity is likely to get matched or not. So I think two fundamental questions. The first is whether the liquidity can get matched. And, I think with the number of, IPOs that will be lined up over the next few months and the, lock-ins that will get over. I think we have seen a few. We will likely see a lot more in the next 2 or 3 months. The last 2.5 month rally, which essentially was sort of unmatched with the supply, might get questioned a little bit. The other more important question is that, fundamentals are not as strong as, they were, before the Russia-Ukraine situation. So crude obviously is something that all of us talk about, and that has increased India's exchequer cost by almost 5 lakh crores or 5 trillion. What we don't realize is that, urea prices have tripled and India's urea bill will be, or rather subsidy will be something like 2.5 lakh crores. Or 2.5 trillion. So all this will likely question the fundamental. The decision we have to make is that, whether we focus more on fundamentals or on flows. And if we choose to focus more on fundamentals, then it is difficult to very aggressively buy into the rally. And flows are a little more trickier to track. And, therefore, I think the time to throw caution to the wind, I don't think we are there yet. With Fed sort of liquidity drawing, we will take a step back and reassess. But I think one needs to remain cautious at this juncture.
Jigar, morning. So what are the changes that you've made in your portfolio? Some of your favorites we know, like First Source, etc., in the mid-cap IT pack. But, considering that you are a bit cautious now, have you exited any of your favorite stocks, your holdings? Have you bought, some different stocks to add the defensive tilt to your portfolio?
Yes, good morning, Rima. So yes, I think cash as a percentage has gone up. We are a little low in deploying all the new money that we are getting. Also, you recollect financials, we were very, very, positive on going into September, October, November. I had started sounding like a broken record. But I think with the rally that has happened, we have taken, some positions off on financials as well. I think the way we are choosing to play this is through, domestic facing services. We did discuss a few hotel names that are of interest. We did discuss, insurance, microfinance, which is very interesting. But I think sort of in generality, small and mid caps is a much lower part of the portfolio now for us than it was, say, in April. Cash is a much larger part, and I would say financials is also a little lower now.